Hello, Mr. Lavender. Welcome, guys.
Zarifah, Dixon.
To episode 2, Z Knows Best. Today, I have a special guest, Mr. Ben Lavender, the British mortgage broker, and he is ranked number 64 in the nation.
That is true.
Woo!
Thank you for having me. I'm excited to be here. It's been a minute since we've done anything, any content, anything at all, actually.
The band is back together.
I think today will be very fun, informative, and who knows where it will go.
All right, let's dive into it, Ben. So tell the world, how did you get started in mortgages? Why?
Since the day I was born, I said to myself, what would make me happiest? And then it came really to my attention when I was 4. I was like, if I become a mortgage broker, my life will be perfect. And that's basically it, ever since I was 4.
Wow.
Yeah, no, that's a lie. Like most people in the business, we kind of just like fall into it one way or another. So I was literally at a family event in New Jersey, and I ran into my cousin who was and still is in the mortgage business, and we still work together. And he was like, again, I was 3 months away from graduating college. I was studying accounting at Queen's College, and he was just like, come give mortgages a try. And I did, and I was really, really bad at it for the first 6 months. You know, it took a lot of growth and learning about not just the business, but like you may be a little bit surprised to hear this, but I grew up being a little bit more introverted. I was very shy. I was the youngest. I mean, still am the youngest in my family, and I just wasn't a very talkative person. And I had to essentially like change my personality, if that makes sense.
And how did you do that? What did that look like?
I brainwashed myself with audiobooks, primarily from, it's funny that we're in 10X Studios, mostly from Grant Cardone. Now, I'm not a huge fan of Grant Cardone, but the audiobooks really helped put me into this like sales mindset and learning a lot of closes from him. And because I always thought like sales was kind of tacky, you know, and like pushing people and to do stuff, which to be fair, I still think is, but listening to him helped me actually change my approach. I mean, don't get me wrong, there were tons of other books that came into play, but listening to Grant's audiobooks really helped kind of brainwash myself, and it gave me more confidence. So that was absolutely key. But, you know, we have a saying that, you know, knowledge is power, right? So the other portion to that was really learning the business. So when most mortgage brokers get into the mortgage business, this is what happens. It's like they don't come in on salary, usually. They're commission-based. And because of that, they need to eat, right? They have bills to pay. They have to live life. So they're not really taught the business. So they're just essentially thrown to the wolves and like, go get business. Like essentially a manager will say to you, okay, you need to cold call realtors, CPAs, financial advisors, and basically everyone, and just try and get business. And what that leads to is a bunch of mortgage brokers saying, yes, I could do this, I could close. And you heard the same pitch. It's the same. We could close in under 30 days. Our interest rates are really good, which ours are actually. But when everyone has the same pitch, regardless of whether it's true or false, it's irrelevant. So I would say the luxury of coming into the business on a salary, given it was a very small salary, but what it enabled me to do is really focus on structuring deals. So the loan officer that I worked under, I really just worked on his deals, structured them, and I had, again, the luxury of working on transactions before like hunting for business. So that way, when I got my license, which didn't take me too long, I think it took me 9 months to get my license, I was able to go after it with confidence, and I didn't have to lie to potential referral sources saying I could do business. And I think that's, you know, it's true to this day, but that's the way it should be done. You shouldn't tell everyone that you can do everything and anything, because many transactions just aren't possible. So that itself has remained the way I do business, and I think that's the way everyone should do business, honestly.
Love it. Keeping it real. Keeping it real for the people. So you mentioned you're a mortgage broker.
I am. I forget. Yeah.
What's the difference between you and like a big bank or a smaller mortgage bank?
Yeah, it's a really good question. So to repeat, there are a few different types of bankers, right? You've got like the big banks like Wells, Chase, Citibank, and whoever that does loans. And then you have the smaller lenders who are like local around here, which I'm not going to name. So the difference, I would say, it's hard to say because I worked for a smaller bank, like a private bank, for 7 years. And I didn't really know any better until I bought a house myself, my first house, and I ended up going to a mortgage broker. And then when we realized how much cheaper mortgage brokers are, we became mortgage brokers.
Cheaper.
Yeah, cheaper. It was cheaper. The interest rate, I'm not exaggerating, compared to my bank was, I think, not more than, but it was roughly 1% lower than what my bank was giving. And the closing costs were way less, and I was just like, this is a no-brainer, honestly. It's an absolute no-brainer. So I'll put it simply, right? If you compare a mortgage broker to a direct lender or a regular bank, when it comes to purchasing, it's the best way to say it, conforming or using what's called a conforming or a high loan balance, basically non-jumbo business, a consumer will get a better deal with a mortgage broker like me 99% of the time. Okay, the part where I tell people that I'm not the most competitive, my rates are still good, they're just not amazing, is jumbo business, right? The multi-million dollar purchases, depending on, again, how many units, the area, the loan amounts, etc. So the reason for that is because jumbo lenders, so let's say like when First Republic was around, First Republic would do mortgage loans essentially for free because what they would require, right? And again, what still many of these big lenders require when you do a jumbo loan, if you move assets over to them, they'll essentially do the loan for free, but they can lend those assets up to like 3 times the amount that you deposit. So it makes sense for them to do the loan for free because they can acquire the assets. That's why it makes sense for if you're obtaining a jumbo loan to go to a bigger lender, like a Chase Private Client does a similar thing. But if you're not obtaining a jumbo loan, 99% of the time, like I mentioned, you should go with a mortgage broker like us because we will be able to get a better deal. Studies, literal third-party studies have proven that on average, if you go to a mortgage broker versus like a regular retail lender, consumer saves $9,000 on average. So
that's good to know.
Yeah, so I wish I could say, yeah, you should go to them for this thing, that thing. It's really only jumbos that you should go to other people for.
Thank you for that. So Ben, you've been in the industry for some time.
12 years, a little over 12, I think.
Wow.
Yeah, good times.
So I'm sure you've experienced the shifts in the markets.
Yeah.
Right? With interest rates, with prices of homes, you've seen it all. So what advice would you have to buyers in today's market, having the experience that you've gone through, the challenges?
Do what I say. That's my advice. Just do it. So for buyers in this market, what advice I'd give them? It's hard to say, honestly, because it's very personality driven. I mean, the most generic and common advice, and to be fair, it is good advice, but sometimes people don't listen and they want the market to really teach them a lesson. But when you make an offer, make a strong offer and don't hesitate, which is hard for people to really absorb because buying a home is one of the most stressful and intimidating things someone can do. So when they're going to make an offer, it's like, this may be my home for the next, 3 years to the rest of my life. So they do hesitate, which is why it's difficult to convince people not to. And again, it's understandable that they do, but you want to make a strong offer, make it quickly, don't lowball, absolutely don't lowball. There are circumstances when you can ask for like a seller's concession or you can go a little bit under, but you would know better than me, but those circumstances are essentially when a house has been on the market a little while, the house is not getting a ton of action on open houses or offers or whatnot, then you got some wiggle room. But otherwise, if it just hit the market, it's a great house, you really love it, you really shouldn't play. That's the most basic generic advice I could give. I do have another one, though.
Share it.
I shall. I'll bill you for this one. No, so a common misconception for consumers is interest rates are going to come down anytime soon. I'm going to wait for them to buy.
We just saw it a couple days ago, and everybody's like, let's go!
So that's one part of it, right? You hear that interest rates came down. Let me ask you a question now, Z. I'm asking you a question. Did anyone tell you that the rates came back up and those gains were essentially erased?
No. No one has told me that.
I'm not surprised.
Except Ben Lavender.
Yeah, I'm not surprised because most lenders don't want to like tell you that. Oh, rates went back up. The market improved Friday, Monday, a little bit of Tuesday, and then all those gains were basically erased, right? Then it went back to what it was last week. So we're not in that amazing territory anymore. It's back to where it was. Rates have improved a little bit today.
So while we're waiting for rates to come down, how could a buyer plan for...
Okay. Yeah, so you're bringing me into my next point. So if as a buyer you want to wait for the rates to come down, keep in mind everyone else is doing that too. So if you want to wait for the rates to come down, no problem, but the home price is going to be higher because you're competing with more people and it's more time that appreciation is kicking in and the price is going to be higher. So the reason that consumers are like this is because the most recent memory they have is the 2008 financial crisis, where home prices plummeted because of a tremendous amount of inventory hit the market. We had all these REOs and these short sales. And I'm not saying it's impossible that it's going to happen again, but statistically, home prices have only gone down 2 times during a recession throughout America's history. And we've had way more than 2 recessions. So because that's the recent memory of 2008, that's where their head's at. And the reality is it's unlikely that will happen again. What's more likely that, as I said before, rates are going to come down, people flood the market, home prices go up. So the smart people who are able to buy, right? Because not everyone can afford to buy right now, because don't get me wrong, the economy is tight, everything is expensive. So if you're in that situation and you're not ready, I'm not talking to you. But if you're ready to buy and you're holding off strategically for rates to come down, strategically, it's not going to benefit you because the home prices are only going to go up. So that is my advice. If you're ready to buy now, buy now.
Thank you, Ben. Thank you. So I also want to
it's really nice to be interviewed for once, by the way. I usually host the podcast.
Yes.
I've done like 60, 70. And I'm just saying, I'm really just enjoying chilling and being interviewed. Yeah, it's fun. It's nice to talk. Who doesn't like to hear their own voice? Sorry, go ahead. I just interrupted you.
My next question was going to be if you could share an experience where you had basically like a horrible deal and you were...
No, every deal with me is perfect. Nothing goes wrong ever.
And let us know what the outcome was. Did it die? Did you end up closing?
Yeah, so deals do fall apart. I love to say that New York real estate is the epitome of Murphy's Law. If something can go wrong, it will. Especially the longer a transaction goes on for, the more negative things that can occur and blow up a deal. Which is why we also embrace speed, because when we close quickly, then less things can go wrong. So, I mean, I've got a ton of stories for you in terms of, things that have or can go wrong. But a lot of them can really be solved by communication. It's a simple one, but it sticks with me all the time and this as an attorney, right? This is something that I know that you do, but it's the simple thing of like closing dates. I can't tell you how many times clients tell me that, yeah, we're ready to close in a month. The seller said they're ready. And then I get a contract with on or about 90 days from contract execution, which puts you out to 4 months, right? Yeah. So, and the buyer's like, oh, I had no idea. I was like, your attorney didn't tell you your closing date that you literally signed with them? And they're like, no, I just sat with the paralegal and signed it there or whatever.
Yeah.
Right? So that's essentially the main thing that causes frustration from a buyer's perspective, is that what was discussed isn't what was on writing. Sorry. But in terms of, deals going badly, I mean, it happens where people quit their job or they spend all their money in the middle of the transaction. It doesn't happen often, but it does happen. So I would just say, like, something that we do, Zarifah, or we started doing a couple months ago, is whenever we pre-approve a client, we literally send them in the mail, congrats and all that fun stuff, but we send them a document with a bunch of do's and don'ts. Don't quit your job.
Yeah.
Don't change jobs without talking to us. Don't buy a new car. It's like this entire list, and then on top of that, we remind them throughout the whole process. And don't get me wrong, there are still some people who think they know better and do what they want anyway.
Right. Okay. Now, you were talking about interest rates.
Yeah.
I have a question for you. So you have a home buyer, and you even mentioned about the contract. It's on in about 90 days.
Yeah.
When do they lock the rate?
It's a really, really good question, actually. So I put it on the buyer. Really? Is my mic high enough? Yeah, I put it on the buyer because you never know what's going to happen. So I have a conversation, or I should say my team and we all have a conversation with our clients in the beginning. It's like, look, we can lock you now. The longer you lock a rate in for, the more expensive it is. So for instance, if you do a 30-day rate lock, and I'm just making up these numbers, so don't run with them. So if you do a 30-day rate lock today at 5%, it's not going to cost you anything. It's going to be free. But if you want to do a 4-month rate lock, to mitigate your risk, instead of paying nothing, it's going to cost you, let's say, 0.5 point to lock it for 4 months. And again, those numbers aren't set in stone. So some clients are like, okay, I can play the game and kind of gamble a little bit, or maybe I'll just see if rates come down and then I'll get a better rate. So if you lock a rate in, by the way, and rates come down, you can actually lower your rates. But of course, there's a catch, right? There are essentially some fees associated with it, and those fees are different for every lender. And the lenders change what those fees are depending on the market and their risk level. So it's not set in stone. So,
and I do have a follow-up question on the fees.
Excellent. So we'll get to that. So what I basically say is, if you can afford to take the risk and you're comfortable with taking it, then take it. But if, for instance, the rate's at 5%, and if you go to 5.125, let's say the rates get worse and that you're at 5.125, and that puts you in a place where you're just uncomfortable with the payment and it's not manageable for you, then that means you cannot afford to take the risk and you need to lock now. Mm-hmm. Okay, so we basically tell them that if, we have exactly what I just said to you, I say the same thing. And I would say the majority of them in this market are choosing to take the risk because rates overall are trending down. Mm-hmm. So there is a higher chance that they'll get a lower rate, but it's not guaranteed.
Okay.
Yeah.
So if you said a longer rate lock period is more expensive,
yep.
right? What happens in the event, let's just say, example, 4-month rate lock, but you close like before the 4 months, even the deadline of the 4 months, right? Do you get like your money back for...
No. You don't get your money back.
Okay.
Yeah. So it's a valid question, right? Because it's like, look, I locked it for 4 months. Now I'm closing in 2.
Right.
I would have liked that 0.5 point back, but you can't. They're not going to refund you because your risk management didn't pay off. So the simple answer is no, unfortunately.
Damn.
Yeah. Sorry. Yeah. Another reason why people choose to kind of wait.
Yeah.
Right?
Yeah.
Because they're like, oh, but what if, we close sooner than that? It's like, yeah, you don't get your money back. And then they're like, okay, I'm going to gamble it. Right? That's on you.
Thank you, Ben. Thank you for sharing all this valuable information.
You're welcome, America.
About mortgages. But I wanted to dive into how do you run a successful business in the mortgage industry?
I really don't know what I'm doing. I just make it up as the days go by. So every day it's one of the reasons why I love the business, honestly, because every day is different. There's a new challenge. So a few ways to there are a few ways to really answer it. One is that I have mortgage coaches that I pay for, and they help me and direct me on what I need to do, whether it's managing the business or recruiting people, originating new loans from a different platform, whatever the case may be. And I have mentors, and then on top of it, my team as well. I couldn't do what I do without my team. My admin does so much for me. She helps me set up my CE events and my content and my CRM, like literally everything. So I think a lot of it is just taking action, because I have a theory that the more things that you take on, the better you get at handling stress and the more you can do. Of course, you don't want to take on too much where it becomes like detrimental to your success, but you do get better over time. So I'll give you an example. Like for a lot of people, getting on a podcast, shooting videos, recording videos is really taxing mentally. And I've been shooting videos for a little bit over 6 years now. So in the beginning, it was really, really taxing mentally. But now it's like doing this is like the back of my hand. There was, like, I mean, you saw when we came in, there was zero prep. We just kind of like, we talked about some things we would chat about, but we don't have anything like planned. And you just get better at doing these things. Same with like public speaking. And when I first started teaching CE for realtors, I was terrified because, again, I'm in front of so many people, other professionals, my colleagues, and then you just get better at it. So the point that I'm getting at is like whatever you think is stressful, just do it and you'll get better at things over time. But of course you need to be really organized and you need to care. You have to work with great people, such as yourself, of course.
Oh, thank you.
And I mean that. She did not pay me to say that. So it's also key. Like the people that you work with is key as well, because I don't work with a lot of people that I used to work with like 3-4 years ago, because my tolerance for drama has gone from like here to here. And the drama that I'm referring to, and you've actually heard me say this to you in private many times, is like making problems out of nothing. You know, it's if you need to cause drama out of something to make you feel like more is going on with your business and you're busier, you know, that's on you, right? If you need to call me at midnight to ask me a question that you could have asked me at a normal working hour, okay, I'm not the person for you. There's no reason to work that way. When you're first, you know, in the first few years of your career, that's fine. But it's literally, it's not like a pride thing, like, oh, I'm too good to answer a call late. It's got nothing to do with that. It's all about efficiency and respect. And if you're managing your business where you have to work on your business at midnight, that just makes you unprofessional. So I basically said to myself a few years ago, I need to get rid of these people. And, you know, even if I've tried coaching them and saying, hey, let's do it this way, because it's not just inefficient for me, it's inefficient for them. And it's a sign that their business is chaos. And by not working with these people, have I absolutely lost business? Yes. Yes, I have. But I am happy to lose that business. And guess what's happened?
You're ranked number 64 in the nation.
Well, yeah, but that was also, I had no idea that would happen. And when I heard, it was a complete surprise. But what happened is that it gives you room to work with people who are more professional. And that's what's happened, right? I've managed my life better and my free time. And this way, when I'm working during the day, I've attracted better partners. And I'm not just talking about realtors. I'm talking about inspectors, attorneys, bank attorneys, everyone in the business that we work with, and even clients too, who are more of a pleasure to work with, and that we're on the same page. If you're a chaotic person, there are plenty of loan officers that will say, yeah, I'll take your phone call at any time. You know, like taking calls on weekends, we obviously still do because the business happens on the weekend.
Right.
You may need a pre-approval on Saturday at 1 o'clock or a Sunday at 6 p.m. That's fine because that is important. Right? But calling at 11 o'clock to get status on a file, which I already gave you on a week ago. If you only checked your emails and your texts, you already have, you know, that unprofessionalism is on your part. It's very, very different. And I want to make that clear. Those are two separate things.
Right. Yeah. Right. So thank you. Thank you for sharing them tips. You know, you talked about taking action, being like an aggressor essentially with the painful stuff, right? Yeah. Attacking it head on, you know, first thing. And then you also talked about having a good team, having good people around you. So that comes with delegating tasks, right? To run a successful business.
I delegate a lot, yeah.
How did you get comfortable with delegating? Because I know it could be challenging, especially when it's your brand. You're like, this is my baby. Like, you can't, this is my name on the line. You can't screw me over, How did you learn to let that go and build your brand?
So it's really funny that you say that because I used to hate delegating and now I mostly delegate, as you know.
Yes.
There are certain parts of the process where I'm involved, like in the beginning, talking to the client, making them comfortable, explaining the process, but then my team essentially takes over and I'm managing. So how I did it, I tried to do it for years, and then I had a conversation with one of my coaches, Kai McBride. Shout out to Kai. And Kai was basically, he sat me down on Zoom and was like, look, you have to get comfortable with the idea that when you delegate, best case scenario is that they will be 80% as good as you. Best case, right? And I said to myself, my 100% is pretty damn good. So 80% I can live with.
Right.
And don't get me wrong, a lot of them, as you know my team well, exceed 80%. And I would even argue that certain things they're better at me at by now. So that's really what changed it for me. But you really have to, one, have faith, but obviously you have to find the right people. And you have to train them, right? If you want things done a certain way, you have to teach them that. And look, a lot of people aren't really coachable, So when you identify that, you have to either put them in a different position or you have to get them out the team because they have to be on board with your vision, right? And you have to have people that really, really care. And that's hard to find. It is hard to find good people. I'm grateful that I have so many that I love working with now and really instrumental to the team's growth. But we want more too. We're looking to hire. So if you're looking to join a great mortgage team, hit me up.
Call Ben.
Call me. Yeah.
Well, thank you so much, Ben, for taking the time to sit down and talk with me and provide all this insight with mortgages, running a successful business.
Shizzle. What's wrong with that?
I'm sorry, you just caught me off guard.
That was the plan. It's working.
Damn, I was wrapping up, Ben. You're too much. Okay.
You can still wrap up.
So, I don't even know what is the last thing I said. Thank you for coming.
For shizzle.
Oh my God, no, please put that.
Just staying in.
And is there anything else you want to say before we say peace out?
Anything I want to say? No, not really. If you would like to chat to me, I'm readily available through my cellular device, aka my mobile phone. Or you can hit me up on Instagram. But generally speaking, I'm here to help. Whether you're looking to buy a home or you're a realtor and you want to work with a great team, we're here for you. And no, that's about it.
Thank you.
Thanks. Peace. Peace everywhere.